Hi there. My name is Eyal Hertzog. I'm with Bancor Foundation. Bancor, if you remember, was one of the first ICOs in this wave. We raised back in middle of 2017 in 2.5 hours, $153 million in a crowd sale. And the product that we're building has since launched. And that is essentially a different approach to liquidity. When we talk about liquidity, what are we talking about? We're talking about the ability to convert one asset to another, one currency to another. If you think about it, liquidity for cryptocurrencies is like the internet for data networks. So every network is useful by itself, but when you connect all the network together to a single network, it becomes much more useful. We call that the internet. The same goes with currencies. Every currency is a tool. It's useful. People can use it to overcome the technical barriers of barter. But if you connect all those currencies together, you get the global financial network, and that is way, way more powerful. That's what allows me to convert my dollars to Apple stock, to bonds, to Bitcoin, to Ether, to all of that. Now today, this liquidity, this connectivity between assets is achieved through exchanges. Now interestingly, exchanges is a very old invention. It's actually a replica of how we used to do things before manually, just with notes, just with shouting on the trading floor. We would, people would close deals. And we computerized that process. But guess what? When you change the platform, you can do things in a more efficient way. So to give you an analogy, when we just started the internet, we had Encyclopedia Encarta. It took a few years to realize that on the internet you can do Wikipedia. It's not an automatic thought. It's not something which is obvious. So the same thing with liquidity. Yes, we can computerize the process of order book and trading between people. But what we did in Bancor, we used a very different method using smart contracts that hold liquidity pool. We were able to provide liquidity in a whole different way that actually has no liquidity risk. So there's a guaranteed liquidity. Now don't get me wrong, the price is not guaranteed. So if everyone is just selling and selling and selling, the price is going to crash, as it should. However, there's no situation where there's lack of liquidity, and there are no market makers required in the Bancor ecosystem. Arbitrageurs do feel an important part, but market makers are not required. So you get guaranteed liquidity, cheaper liquidity, and the nicest thing is that it's more reliable liquidity because you cannot fake volumes. It actually makes no point faking volume, and you cannot pump and dump. Now, I don't want to go all the way to explain how it works, but it's really, but it works. We have 70 tokens right now that you can trade on Bancor.network. It's one of the first ICO to release a product. Not the only one, there are several others, but it's really nice to be at the place that you're not just talking about your dream, but you can actually show how people use it. We recently released the integrated wallet, and this thing is growing and handling millions of dollars of transactions every day. So it's not all dreams in the crypto space, but why did we do what we do? Why did we think that liquidity is the main problem? And this is the title of my talk here. I call it Online Economies. And what is online economies? I think that the space is very, very confusing. A lot of people looking at a space, and regardless from the fact that we see all those weird things that we find it hard to grasp of why do we need all those tokens and all those currencies, and what are the ICOs doing? Are there scams or real thing? But also, if you ask someone, it really depends on who you ask. On what opinion you're going to get. It's almost like going to the Congress and asking a random guy what he thinks about some issue. You're always going to find you're going to hear a different answer depends on who you find, because there's a lot of faction, a lot of different opinions, and I think this is part of the reason that it's all very confusing. And I've been in this space since 2011, May 2011, when I saw Bitcoin for the first time. I thought it was the coolest thing ever. Before that, I was like an internet entrepreneur. I had a company called MetaCafe. It was a video sharing site before YouTube. I don't know how many of you actually used it, but it was actually bigger than YouTube for a short while. And when I saw Bitcoin, I was like, oh my God, this is the first user-generated currency. And it was a decentralized currency. And no one even knew who generated it. So got really excited about that. It took me many years to understand the models that I'm seeing. And the model that we're seeing, I like to call it, again, online economies, because this is not a company. This is something new. What is Bitcoin? I mean, there's like thousands of companies that working with Bitcoin. And they're all kind of working on an integrated database, if you think. They all have access to the same database. They all have access to the same user base. But this database and user base is not owned by any specific one. So when you have that kind of new element, you need to define it, because it's like we didn't have cooperation one day, and all of a sudden we do have cooperation. It's a new type of thing. And this new online economy is not owned by anyone specific. It's decentralized, meaning that it's an agreement. It's not anything tangible. Bitcoin is an agreement between a lot of parties, but it actually serves a purpose. And it's actually disruptive. Bitcoin specifically disrupted black markets. That's what it disrupted. This is why the business world did not take it so seriously, because you have a better way to gamble or to buy substances or what have you. But only when Ethereum came out, we saw disruption to an actual market, an actual industry that we very familiar with. And it's the venture financing. Venture funding was heavily, heavily disrupted by Ethereum. All of a sudden, you had this solution that allows you to raise funds to a project. And the project, again, was not a company. The project was a decentralized economy. Bancor, for example, is a nonprofit foundation, just like Ethereum. It's not trying to make money. What it's trying to do, like any economy should, it's trying to grow. When economies grow, all the participants of the economy, they benefit from that. And it's not like a company that strives to turn on profit and increase that. And we saw with Ethereum a great example of what happens when you have an online economy that is used for venture financing, in that case, growing rapidly. We saw what it does to the token price. We saw what it does to the industry. And all of a sudden, all the people in that economy can collaborate in a new way that they could not do before. Again, I can compare this to email, not to Gmail, not to Facebook, but to email, because Ethereum is just an agreement between people of how to conduct a token offering between them. And the amazing thing that online economies were only made possible when it became really easy to issue a currency. If you think about it, if I wanted to issue a currency for anything, a digital currency 20 years ago, that anyone in the world can use, that there wouldn't even be a price tag for that. It just would be so expensive to do. You need to create a new country or something. All of a sudden, you can issue a new currency with a cost of few dollars. That's a big change. It's almost like before YouTube and before MetaCafe, if you want to broadcast video to the entire world, again, that would cost you billions. But now that you have those new channels, they'll pay you if your video is successful. So that's a big change, a big shift. And we have this technology, we have this. Now, we all used money. We all could use money, just like we all watch TV. But can we issue money? Can we create the video? That's the important question. And that's what changed. And the moment that you can issue your own money, your own token, your own asset, is the moment where you can create this token that can be used on any smartphone in the world with a cost of few dollars. And that could be the basis to a new online economy which is focused on a specific solution. it's like the difference between real communities and online communities. Real communities are generic. They're practically the same, but online communities are very mission-oriented, theme-oriented, and that's the same dynamics with online economies. Online economies can be about disrupting black market, they can be disrupting venture financing, they can be disrupting lending, or what have you. We have a lot of examples today, and in Bancor example specifically, it's about disrupting conversion of tokens, exchanges, and the networking of this whole different economies to one. So that was my 2 cents about how to view those kind of things. My time is running out, so thank you very much. Have a great day. Any question from the crowd?
Can you talk about how crypto is scaling? I'm sorry, about how Bancor is scaling across the different coins on the platform?
So, we started with just Bancor being able to, the BNT, Bancor Network Token being traded. We added the first few tokens, I would say about 4 or 5 months ago to our network. And we've been adding a lot of tokens since. Now around 70 different tokens can be traded, again, with guaranteed liquidity. There could not be a situation where there's no liquidity. And the prices where you can trade is actually the same prices that you can get on exchanges, even better. And the next phase is to make BNT a cross-blockchain currency. So there's a lot of solution today. How can you have a token that you can move between blockchains, and when you move the token between blockchains, then you can convert it on other blockchains to other tokens. It makes the whole thing more connected. I think that today blockchains are like decentralized database, which is essentially what they are. We never had a decentralized database technology, and now we do. So we have a lot of different kinds, like we have different kinds of databases, and those databases need to interoperate with each other. And those interoperability solutions are new and upcoming, but we see a lot of activity there, and we want to scale with that to the entire, to the entire spectrum of blockchain, and not being focused only on Ethereum like today.
Hi, I came a bit late, but I just want to ask, there's been conversations about saying that Ethereum can't deal with high-frequency transactions. And your ERC20, are you looking at other possible ways to upgrade it later date, or is it you're just dedicated to only ERC20? So
when we're talking about how high-frequency transaction, this is something that we see on the stock markets and exchanges today. This is not necessarily a good thing. I mean, obviously, it's a good thing for whoever performed the high-frequency trading. But for people like me that sometimes want to buy, convert my dollars to Apple stock, or convert that to Bitcoin, I don't need high-frequency trading. I need the ability to convert between different tokens. So we're not serving the market makers. In fact, we think that market making is going to be just like driving. It's going to be replaced by technology very soon. So all those specific solutions that market makers need are less our focus, and what we're focusing on is what the market taker needs, because market makers are actually giving the service of liquidity to the market takers, to those who really need to convert between assets. And we target those that group of market takers, so they don't really need high-frequency trading. They just need trading. One more question.
Anyone?
It's all so clear. It was confusing before. Okay, thank you very much.